Hey, what is up, everyone? Good morning. Welcome to Monday morning, 8/29, August 29th, 2022. Pre-market analysis for the futures market. We trade the ES and sometimes the Nasdaq here. My name is George. Welcome to Trading Futures Live. Let's get right into it. In the news today, we've got not much. We've got FOMC member Brainard speaks at 2:15 p.m. So we're not going to concern ourselves with that right now in the morning. We do have some much better news going on later in the week. Tomorrow we have consumer confidence and JOLTS job opening. We have ADP non-farm payroll on a Wednesday. We have ISM manufacturing PMI on Thursday. And then the biggest news on the week is going to be non-farm employment change. So non-farm NFP, non-farm payroll. Is Friday. That's going to be the biggest news on the week. Hopefully we don't chop around too much during the week before we get to that Friday news. So that'll be something to look out for. If we go ahead and take a look at the markets overnight, they gap down, but they are flat. Let's go down to the 60. So they did gap down from Friday's close. We obviously had a huge drop on Friday in the markets, and we are currently down on all four major indexes. All four of them gapped down, and we've just been chopping around in the overnight in that time in a pretty tight range. We did have some range expansion from Friday's move. So the ATRs have all increased a little bit, but we are still in a tight range, and we have the potential for a move today. I'm going to be pretty neutral on the day, neutral bearish, but there is the potential that we could have a move. If we go ahead and take a look at the charts, actually, I've got earnings this week, nothing major. Really no major market movers at all this week on the on earnings. I think HP, Best Buy, yeah, not much. Nothing that we're going to necessarily concern ourselves with either. Either. I did want to start taking a look at this. This is something that I take a look at least once a week just to have a general idea. This is the Federal Reserve's balance sheet, which they are supposed to be tightening up. During coronavirus, they bought trillions and trillions of dollars worth of bonds, I believe, and even continue to do so over the last year and a half, post really like 2020, until earlier this year when they pivoted from monetary easing to monetary tightening, or quantitative easing to quantitative tightening. And so this is supposed to start coming down, and it's supposed to have started 2 or 3 months ago. Obviously, they buy at a lot faster rate than they sell. But this is something we want to keep an eye on. If you look at the stock market and compare it to this, you'll see a little bit of a correlation. So if this starts to come down, right, this was the drop that we had in 18 and early 19. That correlated with some drops in the stock market as well. So, and then also we're going to take a look at here. This is the target probabilities for the rate increase coming up in September. And currently it is at 64.5% for a 75 basis points rate hike. We are currently sitting at 225 to 250. So this is the 75 basis points. We're at 64.5%. And then this is the 50 basis points, 35.5% probabilities on the CME Group website. And so just a little something that we'll continue to add on here to take a look at. Let's go ahead and take a look at the charts. This is the weekly. We have gapped down on the weekly, but we are chopping around in a pretty tight range. Last week we gapped down and ran quite a bit. And I missed that trade. I set the trade, but it missed my entry by a few points last week. I was a little bit more aggressive getting into it last night, but it's just gone sideways and stopped me out. So you'll see that I'm actually already down $300. That was my R on this trade, $300. And I took a loss in the overnight. But we'll work to make that back this morning. So on the weekly here, still bearish, lower lows, lower highs. We'll see if this is the pullback, right, that I've been mentioning over the last few weeks. Is this the pullback we're going to get to turn this into a bullish trend, right? Is this going to be maybe the new low, the higher low, somewhere in this range here before we break that trend line and start to go up again? Or is this just, was this the dead cat bounce to come crashing back down? And so that's why we show up. But for the moment, I am still bearish on this time frame. Really, we need to, at the very least, break this trend line and or break this pivot high here to create a new high and for me to start to be bullish on this time frame. So on the higher time frame on the weekly, I am bearish. If we go ahead and take a look at the daily, right, on Friday we had a huge drop. We did gap down and have been chopping around. We do have a level here much lower, not much lower, but a little bit lower, and that's why I say we do have some room to run, especially to the downside. I think on this daily chart, we do have some demand here in the way that we'll take a look at on the hourly, but we've got these pivot high, these highs here from back in July and early August. Sorry, in June and early July. They coincide with these lows as well. So previous resistance turned into support, and we'll see if it turns into resistance again as we see if it comes in lower. I also have the 50 SMA here that price is pulled back into, so we're trapped between the 200 and the 50 right now. You'll see that the 50 has started to roll up over after this run, and so certainly going to be much more neutral while we are above this 50, while we're trapped in between these. If we break below, I will most certainly be bullish, but on this time frame right now, I am neutral to neutral bearish, and I'll become more bearish as if we break this 50. And then if we go ahead and take a look at the 1 hour chart, not a great chart to look at because of this huge run down, right? Didn't really give me, these are basically my levels from before this drop, because there isn't much in this drop to look at. The levels are going to be support and resistance levels that we have right here. These lows here that coincide with these lows. I mean, that's really the levels that I have right now. This level here that also coincides with the overnight low right now. And then these highs, really, I didn't even mark this level as these highs. It's really just the overnight high. And I'm going to mark that up to the gap fill. I'm going to get rid of this zone for the moment. And, right, a break above there, we'll have to go into a smaller time frame and see what we have in here. But it was pretty much a straight drop down. This is the 15-minute. I mean, there's no great levels in here to take a look at right now. And so we'll have to do much better in real time today. Again, I'm neutral to neutral bearish. We can certainly, after a huge run range today, we can chop around quite a bit. And so I'm going to be more so playing the ranges earlier on, right? I'm going to be playing these lows here and likely some reactions off of the demand. Take it back up to there. I'm going to need to see a strong breakout to think about getting short. going to be more hesitant today. I'm neutral bearish. I'm not bearish. And so I'm not going to be necessarily playing the breakouts very, very heavily today. I'm not going to be all that aggressive. If we do get a breakout to the upside, I'm going to, again, need to be very patient, right? If we start to see rejections and it can't follow through, we'll look to get short. But if we do get maybe a stronger push and then we start to hold above this area, above the overnight, to get long, right? So we're going to want to see signs of strength and sustained strength holding above the overnight to get long. If not, we're going to be looking to rotate over and play the rotation back down. And the same but opposite is true to the downside. And it's going to be my two scenarios for the ES. Well, my 4 if then statements for the ES this morning as we go into the open, guys. We'll catch you guys in about 10 minutes. Thank you for joining. We'll be live in about 10 minutes. Take care.